Okay, so if you just glanced at the market, you'd probably think it was a pretty down day. But if you look a little closer, something really fascinating is happening. It's a tale of two different tech markets, literally moving in opposite directions on the very same day.
And this slide right here shows you the puzzle perfectly. You've got the big indexes, the S&P 500 and the NASDAQ, both down in the red. But at the exact same time, the index for chip stocks isn't just up, it's hitting another all-time record high. So what on earth is going on here?
And that's exactly what we're going to dig into. We're looking at a market that is completely divided. How is it possible for one tiny corner of the tech world to be soaring while the rest of it is getting totally hammered?
So first, let's just set the scene for the broader market. And yeah, it wasn't a great day. The S&P, the NASDAQ, the Dow, all of them closed down. This is the backdrop. This is the stumbling part of our story.
So let's rip the Band-Aid off and start with the bad news. Big tech had a really bad day. The giants, all the names you recognize, they were definitely feeling the pressure.
And I mean, the pain was pretty much everywhere you looked. You had Tesla shares dropping after a mixed report. You've got giants like Amazon, Alphabet, and Microsoft all falling as investors got nervous ahead of their earnings. Meta announced it's cutting 10% of its staff. And get this, even the unstoppable NVIDIA took a hit.
But the real bloodbath? That was in software. The main ETF that tracks the whole software sector just plunged. A staggering 5.8% in one day. That drop completely erased an entire week's worth of gains. Just poof, gone.
So what caused this sudden nosedive? Well, it wasn't just random panic. It really came down to some disappointing earnings reports from a couple of key leaders in the space, IBM and ServiceNow. That bad news sent a shockwave through the entire industry and kicked off this massive sell-off.
Okay, but here's where the story takes a wild turn. While all that chaos was happening in software, a completely different story was playing out. Let's talk about the unstoppable boom happening in chips right now.
17. Just let that number sink in for a second. That's the number of days in a row that the main semiconductor index has been gaining. It is the longest winning streak in its entire history. Absolutely insane.
And this rally had some superstar players. You had Texas Instruments, which just exploded, surging 19% because of its amazing earnings report. And that basically acted like rocket fuel, pulling the entire chip sector right up with it.
And then you've got Intel. I mean, just look at these numbers. It was a total blowout. Wall Street was expecting, 2 cents a share for earnings? Intel comes back with 29 cents. They expected $12.4 billion in revenue. Intel delivered $13.6 billion. It was a monster quarter, no other way to put it, and it was all driven by massive growth in their data center sales.
So what's the magic ingredient here? According to Intel's CEO, it all comes down to one thing: AI. He said, and I'm quoting here, that the CPU, the thing Intel is famous for, is reasserting itself as the indispensable foundation of the AI era. That quote really connects all the dots for this rally.
All right, so whenever you see a run-up this crazy, this historic, you have to ask the big question. Is this for real? Is it sustainable? Or are we just watching history repeat itself? Are we in another bubble?
This is the question on every investor's mind right now. I mean, a rally this fast and this furious, it feels a little too familiar to anyone who remembers the late 90s. So let's actually look at the evidence.
Analysts have a name for this kind of move. They call it parabolic. It's a fancy way of saying the price has gone basically straight up like a rocket. The semiconductor index is now trading more than 40% above its long-term average. The last time the gap was this wide was June of 2000, right before the dot-com bubble burst. That is a pretty sobering thought.
But here's where it gets really complicated, because history is kind of telling us two different things. On the one hand, yeah, analysts are flagging that these kinds of long winning streaks were super common right before the big crash in 2000. Yikes. But on the other hand, if you look at the data, every time the index has been this overbought in the past, its average return over the next year has actually been a positive 22%. So which version of history do you believe?
Okay, so we've talked about the market itself, the bubble fears, but now we need to talk about the elephant in the room. There is this huge external risk out there that it feels like the market is almost completely ignoring right now.
And that risk is geopolitical. We're talking about the growing conflict with Iran and the very real possibility of a blockade in the Strait of Hormuz, which is one of the most critical channels for global trade. For now, it seems to be a total blind spot for most investors.
And if this feeling of ignoring a big brewing problem sounds familiar, well, it should. Just think back to early 2020. Stocks hit a record high in the middle of February, even as COVID-19 was spreading. Most analysts on Wall Street were downplaying it, and then just weeks later, the entire world shut down. It's such a powerful lesson in how quickly a risk that everyone is ignoring can become everyone's reality.
And the potential fallout from something like this would be severe. We're not talking about a small dip. We're talking about major disruptions to oil, gas, and even fertilizer supplies. We're talking about possible factory shutdowns across Asia and Europe. It would be a wave of pain that would hit the bottom lines of U.S. companies by wrecking global supply chains for months, maybe even years.
So that's where we're at. It leaves us with one final, crucial question. On one side, you have this incredible, record-breaking optimism that is just completely fueled by the promise of AI. But on the other side, you've got slowing software giants, you've got scary echoes of a past bubble, and you've got very real geopolitical dangers brewing. Can the AI boom continue to defy it all? That is the billion-dollar question.